Hello, I'm Doug Mackenzie and welcome to the Paytech Show. In this roundtable edition, we're talking to the top payment specialists in the world. From financial inclusion to consolidation, Ali Patterson had the pleasure to sit down with Mastercard, Wirex and BPC at our roundtable event in West London. We also bring in brilliant thought leaders from Curve and Monese to hear the latest trials and tribulations and trends facing the industry in 2020 and beyond.
I want to bring the topic to financial inclusion, but for present day. And by that, I don't just mean everyone having a bank account, I mean everyone having access to a variety of services. What's the biggest problem when it comes to financial inclusion today across the whole globe?
Well, I think firstly, everybody's a different path of being financially included. There is obviously a difference between unbanked population and then financially included population. With the advancements in payment technology, you could bring a lot of unbanked population in various parts of the world to become parts of the financial system. So I think that's one of the biggest advancements from that. Fintech companies and banks as well, the schemes have done to include people in various countries who didn't have access to the banks to be able to transact, to give them the means. And here I'm talking generally about QR codes, about wallets, about P2P mobile transfer. So everybody, different countries have gone different ways. Obviously, M-Pesa made a big difference in Kenya with the mobile payments. Similar projects have been done, like also with the help of BBC in Asia, in Indonesia. Obviously, China is there. We have the wallets, the QR payments, and a lot of the poorer countries will also look at. They probably go first for QR codes, just that in terms of the technology, it's probably the least expensive way.
If everyone's already got a mobile phone, you want something on that.
Exactly. So I think in terms of challenges that still exist on including the population, again, we need to look region by region, more specifically country by country, but I think a lot of it comes to infrastructure, because there's a lot of talk saying, yeah, these people may not have a bank account, but they have a mobile phone. But we also underestimate, or rather overestimate, how many people do have mobile phones, or that those are smartphones. In a lot of countries, they're still normal USSD phones, so there has to be technology that supports that. Also, just access, again, in certain countries, it's access to certain rural parts to educate people, to, if we're talking about Bangladesh, where it's super densely populated country, but again, it's probably maybe only in the capital where the awareness of other means of payments other than cash is prevalent. But then you need to be able to access villages and then adopt the merchants there, or like some sort of a merchant that everybody in that village goes, and then sort of educate them how to transact. Obviously, there's trust issues. There's also a question of why should I switch from cash to something new, right? So in a lot of countries, that is done by ways of sort of promotions. So if you pay via this app or via wallet or via QR code, then you get whatever cheap or something. Yeah, so education, trust, but again, I don't think we need to underestimate the issue of infrastructure in a lot of those places. When people say about how Africa is a very fruitful ground for innovation and leapfrogging, sort of branches in banking and going into sophisticated means of payment, there's still the issue of access. The roads, the electricity, the broadband. So it's so I think education and infrastructure probably are the main issues that are still there in getting more people financially included, and also probably the focus of various companies, various payment providers who tend to go as a business, I think that's natural, for the geographies where you know the market is already ready for that, and foregoing harder to penetrate markets, you know, where they see probably it's going to be an investment, but you know, they will see the results in 5-10 years time, probably because, you know, the actual level of education, the level of living in those countries is still far away from, you know, explaining to them what a wallet is. So
you mentioned Bangladesh there, and that's quite an interesting market because the opportunity there is huge.
Well, yeah, I mean, people, it's India, everybody's talking about India, but obviously with a lot of focus right now on it being from payments perspective, as if it's next China, especially with a lot of foreign money coming in, with Warren Buffett investing. So, but you know, Bangladesh is a super densely populated country just adjacent, and that they are a lot of levels behind. So,
what's the looking at regions like Mexico, like India, like Bangladesh is a great example. What's the opportunity there for companies like Wirex to help people in terms of digital payments?
Well, we as a company, we're doing, you know, two parts of payment business, this new digital or cryptocurrency, and we do traditional as well. With traditional part, there are certain challenges, and I don't think we can, you know, improve, you know, dramatically the experience of people who live there. At the same time, cryptocurrency are getting more and more popular in Latin America, for example. There are two reasons. So one is a weak local currency. So for a lot of people, digital assets or cryptocurrency is a kind of alternative to a local currency, as a way to save money or to invest or not to lose because of the inflation. And the second use case is digital assets or cryptocurrencies is an easy way to send funds abroad. It's cheap, it's almost instant, and yeah, it's much easier than sending Brazilian real from Brazil to another country, and it's much cheaper as well. So our services or services similar to ours right now are booming in Latin America, Mexico, Argentina, Brazil. Why? Yeah, people just, you know, they opened the new world of digital assets, and they trying to use it as investment, trying to use it as a payment vehicle. But yeah, there are definitely demand from these countries.
just generally, LATAM has become a very, again, hot place for non-traditional payments, especially, with all the focus on Brazil and startups, which, big companies, right, like Stone. So there's a lot of, the penetration of alternative methods is definitely quite high, with the interest being also quite high. So I would say LATAM is definitely higher than some other countries in terms of awareness of that.
Excellent. Just on that point there, we're actually going to hear from Monese.
How are we going to improve financial services, the higher end financial services like investing, like getting a mortgage, to people who have traditionally been left out of those services?
So I think right now, again, the world is changing a lot. So I mentioned earlier that people who are traveling around, they are now currently being excluded from things like credit and mortgages because they have just moved to a new country. So when we talk about, say, financial inclusion, what people typically then mean is that people who are outside the system because they are poor or they have gone bankrupt or something like that. But there are many aspects of financial inclusion and exclusion. So, for example, I strongly believe that the future will be very much focusing on making credit available and accessible to those who are good customers, good repayers, but they are excluded from the mainstream just because the data, the credit history has not traveled with them. I know as a fact that many companies in the world and Europe and UK right now are really working on this problem, but no one has quite figured it out yet. So what is missing is this sort of a global approach, a global company that is able to pull credit information from all sorts of cloud and sort of a regional and international databases about the people and make sense of it all. Support banks with the decision making when credit is under the question. So Monese definitely intends to be one of the innovators in the space. So what we are aiming to do is making credit available to those who are new to the country in 2020, basically. So this is one of our core focus for this year.
Thanks, guys. The last thing I really want to touch on is I do want to look at the future of what's going to be in people's pockets, what's going to be in people's wallets. It's always very tricky to try and predict what's gonna happen, because there's that age-old quote: you always overestimate 1 year but underestimate 10 years. But I think it's more interesting to try and understand what you'd want to happen and what the effect of that would be. So just to start with yourself, Pavel, what would you want to see people using as their payments in the future? What would you want to see as the ethos behind that?
I think actually there will be multiple methods coexist in a wallet. And I personally don't believe there will be one payment method to rule them all. I don't think the consumers will notice. So for consumers, it will be just a balance in your currency which they use to pay. So I think the main driver for this, innovation in the payment space will be coming from e-commerce companies like Amazon or Booking.com or similar companies, because there are clear advantage for them to accept the, let's say, stable coins or digital payments or cheaper, faster payments on kind of a global scale. They can save a lot of money, just, going from card acquiring, for example, to stable coins, and they can incentivize consumers to use this particular method. So what will be in the wallet? I think in a wallet will be multiple payment methods and options, and it will be on the background. And different payments methods will be used for different use cases. But for consumers, it will be all the same. It will be balanced and very easy way to make payments. Will be a QR code, contactless payments, or something else. Well, it's very hard to predict, but I think convenience, it will be driving user experience. So I do believe we will be using mobile phones if people still use mobile phones in 5-10 years, but there will be something. So I don't have simple answer for your question, but I do believe there will be multiple payment methods and they will be coexisting in the same wallet.
Absolutely. Is that yourself, Mike?
Yeah, so I totally agree with the point that there will remain multiple options. There will not be one solution to kill them all, because
Desperately trying not to say for everything else there's Mastercard, but
yeah, it's all right. You said that. But I think one of the changes we are likely to see is a move towards identity as being the only thing that you need in order to make a payment. So whether it's facial recognition or fingerprint or whatever technology it is, all that you need in order to make a payment is yourself, is your identity. I think that is a very likely, not very near term, but medium term development. Because if you think about the things that we use to pay today, what are they doing? They're providing some form of authentication and maybe providing some form of sort of interaction as well to say, yes, that's the amount I meant to pay and that's who I meant to pay it to. The second two things can be taken care of with technology that belongs to whoever you're paying. And the first one, well, we're already getting quite used to the idea of our phone identifying that it is us that's using it. So it's not a huge leap to say, well, when I walk into a shop, whether it's using my own phone or a piece of technology that belongs to the shop, it recognising me and knowing that it's me with a high level of confidence, that is sufficient to provide that sort of authentication and identity.
Yeah, I would agree with everything that's been said. I think ultimately, those are buzzwords, but that's the reality, that mobile is there to stay, that from consumer perspective, as long as it's instant, frictionless, and easy, that's going to be that's the way forward. Whatever that actually entails in terms of technology, what payment method it is. It took you 10 years to go from cash to lots of cards in your pockets. I think in the next 10 years, those massive wallets will be removed to just having all of that stored in the phone. So I think whatever manipulations you do with your phone and whatever happens behind it, that's kind of the way forward. But I think that's an important point that we've just raised about identity, that the facial recognition or the vein authentication or whatever method you can use to even eliminate doing any manipulations with your phone, but just looking or touching or whatever something, that's going to be, that also has a lot of room to exist. And I think the ecosystemic point there is also quite big, where there's one identity, as Paul had said, and that is being recognized for, you know, your transport payments, your utility payments, the ability to pay at any merchant. So some sort of consolidation, but also making it all easy, frictionless, etc. for the consumer is the way forward. And in terms of if there's going to be one payment method and one company, I would also agree with what has been said. The world is at different stages of adoption of different payment methods. Interoperability, you know, is still a big issue, you know, even in the wallet space. I think we're far away from one universally adopted alternative digital payment method.
On that point there, particularly around consolidation, I just want to hear a little bit from the guys at Imagine Curve. What is on the agenda for this year with America, and how do you think the American audience is going to really react? Because they love a card in America.
Yeah, they love cards. They love credit as well. So the biggest problem in the States, in our view, is the consumer credit debt. And the fact that regulation allow for debt to persist for a long time, which we know in the UK they solved it last year with new regulations that prevent persistent debt to continue over a period of time. When I say consumer debt, I don't just mean credit card debt. I mean student loan debt as well, and car loan debt, which in aggregate is over $5 trillion. And the manifestation of that love for credit is by the number of credit cards people have. So when we look at the US and we look at the market problems, we believe that curve positioning as all the cards in one is best fit for that market, because on average, as you said, an average customer in the US would have 7 to 8 cards, and that's an average across all the states in the US. If you're looking at San Francisco and New York, the average is around 14, because they have a card for merchants, they have a card for different type of rewards, different airlines, and they have a debit card, of course, joint account, business accounts, and so forth. So as we launch in the US, we believe the curve positioning is probably the strongest positioning in fintech that is going to emerge in the next year. And those who use curve understand why. Those who don't should try and start to understand why. But with it, we also looking to launch, and it's likely to be early next year, because we're first gonna focus on launching and stabilizing the new office and operation there. We're gonna move into credit. And the way we're going to do that, we're going to allow customers to refinance their credit card debt with a tap, or split a transaction they made in the past into installments. So those are more affordable type of loans. They have a prepayment plan in place. So every month there's a deduction of a certain amount coming from my account. It's not that I have to go and pay and I can miss payment. They can no longer miss payments. They can manage their cash flow better. And by doing so, we believe it will be able to help the American consumer to reduce their cost of debt and reduce the persistent credit card debt, which is something that unfortunately we do not see many companies do.
See, I would actually argue that you are already working in credit, because the way that I use it, I use my credit card set as my default, and every week I go back in time, put them where they should be.
That's true, indeed. Curve, we're aware that in a way, it's not a consumer credit product per the regulation, but it does allow you access to credit products and allows you flexibility and control around how you use those credit products. So a user who made a transaction on their checking account towards the end of the month, they need more money, they can tap to move money to their credit cards, and more money is being freed in their account for their direct debits, or even having good experiences with friends. And sometimes, unfortunately, we even see customers that they need to pay the bills for the family, electricity and gas, and don't have enough money, and they're going back in time, or contacting us because they need to move more than what go back in time allows, and asking for moving more to do that. Not many times, but we had some incidents. So yes, Curve, the innovation of Curve is so unique, it allows you to have new ways of looking at credit, as you said, or managing credit.
Thanks for watching this episode of the Paytech Show, and make sure to catch the rest of the episodes at www.fintechf.com. See you then.